Hi, this is Joseph. In this video, I'm going to teach you the Good Morning London strategy. So this is a trading technique that I developed when I first started trading. When I first began trading, I started trading futures. I was trading the E-mini S&P. This was back in 2000 and 2001. And what I was doing was trading a real simple strategy. I'll give you an outline of what I was doing there. I was trading a break off of the first 30 minute. So when the New York market would open, I would watch the E-mini S&P. What I was doing was waiting for the first 30-minute bar to close at the open, and then I would watch to see which direction price was going to break based on that first 30-minute candle. So I started to implement this with the pound dollar at the London Open. So right here where I'm moving my cursor and where you see this up arrow, that is the first 30-minute bar or first 30-minute candle. I also trade off of bar charts as well. That's why I keep referring to them as bars. So let me go ahead and open this up. So what I'm doing is I'm waiting for that candle to close. That's the first 30 minutes at the London Open. Wait for the candle to close. And then I watch. So obviously it closed down here at the lows. So it opened at the highs, closed at the lows. There was a little wick down here. The next candle makes another move, probably about a pip and a half to the downside. But it does not take out the low of that first 30-minute bar. The first 30-minute candle is all I'm concerned about, right? Sorry about that. Let me try to get this in place here. This is the only one that I'm concerned about. I just want to see what's going on right here on that first 30-minute candlestick. It did not go any lower than that first 30-minute bar, so there was no reason to short it. I have an indicator down here, but I do not use any indicators with this Good Morning London breakout strategy. I only use the price action by itself. There's no indicator. The only reason why there's an indicator right here is I also use this chart and this setup here, what you're looking at, to trade the HL30. The HL30 is an extremely profitable trade. Go to my YouTube channel, go to my website, and you can learn all about it. But this is, again, just a breakout, so there's no indicators that I'm using here. So there was no move to the downside. There was just, I had to wait for it to reverse. And then it takes out the high of that first 30-minute bar, and that's my entry. I get in when it takes out the high or the low, depending on which direction it goes. So there was really no head fake in today's situation. Now, I want to calculate when this candle closes. So you can see here the price tag right there. It reads a high of 1.3389 and a low of 1.3376. So if the high is 89, I use a 1 pip entry, meaning that it has to take out the high by 1 pip. I want to make sure that there's going to be some follow through. So if it's 89, then my entry is going to be 90, and that's exactly what I had here. 1.3390. That was my entry. Once it hits 1.3390, I get into the trade. I put my stop just below the low of that 30-minute bar that 30-minute candle, and then I use a 20 pip target, and if it hits the first 20 pip target, it could go for an additional 20 pips further. So I'll show you what that looks like in just a moment, but today all it did was hit the first target. It hit the first target on the next 30-minute bar, or during that time that I got into the trade. Now, if I want to capitalize on a trend that's going to go further, which it does in many cases, I would have to open up 2 trade positions, and I would close the first order once it hits the first 20 pip target. And then at that point, the second open remaining order that I have, I would set it at a break-even stop to protect the profits. So if it comes back down, if I get in at 90, my break-even stop on this one, if I'm using a 1 pip spread, is going to be 91. So if it comes back down to 91, it closes out that second position at 0. I earn 0 profits, or maybe even a half a pip, let's say in some cases, but I still protect the profits and I still earn 20 pips. This is a good, clean trade, really simple, really easy, no indicators to use. So yesterday we had another good morning breakout strategy. So here we go again. There is my 10 o'clock candle right down here where this arrow is. You can see you can see the low, you can see the high. So my entry, let me go ahead and get you the price tag. The high of that bar is 1.3391. So I can't get in until 1.3392. 1 pip entry, remember. So it goes up, my stop's below the low of that 30-minute bar that I get into, that actually gives me my signal. And then I trade it to the first 20 pip target. And you can see here, my target, if I get in at 92, my target's going to be 12. This candle right here went as high as 15, 16 approximately. So once again, it only hits the 20 pip target. So in 2 days in a row, it paid, it worked. Today it made 20 pips, yesterday it made 20 pips, and then the whole thing kind of rolls over and I get stopped out on the second half at 0, break-even stop loss, remember that, break-even stop loss. So the second half of my position earns nothing, but I still keep and lock in the profits on the first part of the trade. Okay, here's a perfect example where the Good Morning London strategy hits both targets. you could earn effectively 60 pips. Let me explain how it works. Again, here's my first 30-minute bar or first 30-minute candle at the London Open. The high of that candle right there is 1.3483. Using a 1 pip entry, I can't get in until 84. I had to put the price tag over here to the far right just so that you can see it. I want you to see, but this is the actual candle, that red candle right there. So I get in at 1.3484. My first target's going to be 1.3504. My second target's going to be 1.3524. Again, I open up 2 positions when I get into the trade. It hits the first target, I earn 20 pips. I then change the break-even stop. So I no longer have the stop here down here below that low on the second half of the position once it hits the first target. I don't change to a break-even stop until it hits the first target. Once it hits the first target, again, we close out the first position. The second position is allowed to continue to run until it hits that second target right there. We earn 40 pips on the second position, which means from the entry of 1.3484 to the final target of 1.3524, that's 40 pips. I earned 20 pips on the first trade, 40 pips on the second trade, for a total of 60 pips. I trade standard lots. That's $600 on this trade. The other 2 trades that I showed you just a moment ago, they each hit their first 20 pip target, so I earned $200 on each one of those. It's a really easy trade, really easy setup, but I have to warn you, if you're not careful and if you don't look at the overall conditions by watching the closing prices on the daily time frames the night before you trade this, you could experience some losses, but you can avoid those losses by analyzing the charts on the daily time frame the night before you decide to use the Good Morning London strategy. I teach you how to do that in my trading course so that you can eliminate almost all of the failed trades, and then you stay away from it when you see that the conditions are not appropriate. Thanks for watching. I hope you had a good trading day.